Q. Old or new, which tax regime should I opt for? Welcome back to the Plan Future Insight. What a wonderful question you have asked. This is one of the most important financial decisions you will make every year, and I am genuinely proud you are asking this. Let us break it down, simply and clearly. Let's start with a simple truth. The better tax regime depends entirely on your specific financial situation. Here is the core difference. The old regime allows you to claim deductions to reduce your taxable income, but you pay tax at higher slab rates. The new regime gives you lower slab rates, but you give up almost all major deductions. Now, let's run the numbers with a real example. Imagine you are a salaried individual under 60, with a gross salary of 15 lakh rupees per year. You have common investments like 1.5 lakhs in EPF or PPF, 25,000 in health insurance, and 50,000 in NPS. You also have a standard deduction and an HRA exemption. Under the old regime, after all these deductions, your taxable income becomes 9.6 lakh rupees. Your income tax payable would be 1,12,500 rupees. Under the new regime, you only get the standard deduction. Your taxable income becomes 14.25 lakh rupees. Your tax payable would be 1,42,500 rupees. The result? In this case, the old regime saves you 30,000 rupees. However, the story changes completely if you have fewer deductions. If you only have 50,000 in deductions, the new regime could save you 60,000 rupees instead. Here is where it gets interesting. The crossover point usually happens when your total eligible deductions are around 3.5 to 4 lakhs or more. If your deductions are below this, the new regime often wins. Think of it this way. Choose the old regime if you have high HRA or home loan interest, substantial investments, health insurance, NPS, or donations. Choose the new regime if you have minimal investments, no home loan benefit, and simpler finances. The new regime is now the default option. If you want the old regime, you must actively choose it. The government designed the new regime to be attractive for those who do not engage in complex tax planning. But from a wealth building perspective, I want you to see this as a behavior choice. The old regime provides a structured path to forced savings, which builds long-term wealth. I have seen many pick the new regime for immediate cash, but then they never build the savings habit. The old regime acts as a wealth building engine. That 1.5 lakh in deductions, if invested in a disciplined ELSS SEEP, can grow to over 1.5 crore rupees in 30 years. The tax saving is just the starting bonus. This is not just a tax math problem. It is a wealth behavior choice. For most people building wealth, I lean towards the old regime because it partners with your future self. Here is what you can do this week. First, list down all your potential deductions for the year. Total them. Second, use a reliable online tax calculator and plug in your exact numbers. Let the data decide. Third, if you choose the old regime, automate your tax-saving investments via SIPs. Do not wait for March. Dada's wisdom of the day. Paying tax is a responsibility. Optimizing it is smart. But true wealth is not built by saving tax alone. It is built by investing the savings wisely. Let your tax regime choice be the first step of a disciplined investment journey, not the last. You are asking the exact right question. Whether you save 30,000 or 60,000 rupees, the real victory is using that awareness to build a process. I am here to guide you. You have got this. Remember, investment in the equity market is subject to market risk. We do not claim any guarantee of return in equity-related investments. Past performance is not indicative of future results. For personalized guidance, you can connect with registered professionals. Dada's Action Plan. 1. Immediate. This week, list down all your potential deductions for the financial year, HRA receipt, LIC, PPF, ELSS receipts, health insurance premium, NPS statement, etc. Total them. 2. Short-term. Before filing ITR, use a reliable online, old vs new regime, calculator, like those on ClearTax or Grove, and plug in your exact numbers. Let the data decide. 3. Medium-term. Financial planning. If you choose the old regime, automate your tax-saving investments via SIPs in regular mutual funds, like ELSS. Don't wait for March. A 12,500 rupees monthly SEEP in an ELSS fund takes care of your ATC and builds market-linked wealth with professional guidance from your MFD. Dada wisdom of the day. Paying tax is a responsibility, optimizing it is smart. But true wealth isn't built by saving tax alone, it's built by investing the savings wisely. Let your tax regime choice be the first step of a disciplined investment journey, not the last. Personal encouragement. You are asking the exact right question that separates those who let money happen to them from those who happen to their money. Whether you save 30,000 rupees or 60,000 rupees in tax this year, the real victory is using that awareness to build a process. I'm here to guide you through every step of that process. You've got this. Dada provides educational wisdom and guidance. Always consult your registered financial professional or CA before finalizing your tax regime choice. The above examples are illustrative. Thanks and regards. Kaustav Bishwas, www.planfuture.in